Welcome to Crypto-Based Media. You all are welcome to tonight's session. You all are welcome. You are welcome. You are welcome. So tonight you are going to be talking about technical analysis tools. Every crypto trader must know. Technical analysis tools. Every crypto trader must know. If you trade crypto, if you trade forex, in fact, the topic is supposed to be TA tools. Every trader must know because it also involves stocks and forex traders. So if you trade forex, if you trade crypto, this class is for you. If you're a newbie or um, you are a guru in trading, this class is still for you. This class is still for you. The class is both for experts and for beginners. Everybody is going to understand what we are talking about tonight. Everybody will understand what we're talking about tonight. Okay, great. As always, guys, I won't like to waste our time. I won't like to take our time. So, um, me myself, I'm super pumped to take you guys on this topic tonight because it's about technical analysis. Technical analysis is very, very interesting. Very, very interesting topic in the crypto industry. Very, very interesting. And we all know for you to trade one or two, you need technical analysis. You need to analyze. You need to know. So we are going to be talking about TA tools, important TA tools for crypto traders, important TA tools for crypto traders, important TA tools for crypto traders. So please, technical analysis, one of my best topic in crypto trading, one of my best topics, technical analysis. And in technical analysis, you are going to be looking at the tools, TA tools every crypto trader must know to trade profitably. Please, okay, great. I want to hope that everybody can see my screen clearly. I want to hope that everybody can see my screen clearly. In this session, we'll walk you through the meaning of these tools and show you how to use them properly to spot buy and sell opportunities. And then also, I want everyone to stick around because there is definitely a lot to learn. Now, this is the outline. At the end of this Zoom session, you'll be able to learn all of these completely for free. You learn what TA is, what technical analysis is, what TA tool is, what indicators, the difference between the two of them, and then the most important tools you need to know. The most important tools you need to know for you to be able to spot trading opportunities and trade profitably. Now, don't worry, if you have any question, just make sure you stick around. And then when it's time to ask questions, you can just drop them in the chat session when I say so. And then I'm going to be providing answers to all your questions. Now, okay, who is this guy talking? Who is this guy? Who is this guy? My name is Rock, and I'm a content creator for crypto-based media and also a crypto trader, a crypto analyst. And that is the reason why I'm able to talk to you guys on technical analysis. Any other person can talk to you on technical analysis. It has to be somebody that has experienced the charts, that has played with the charts, that has played, that's buy, sold, you know, that's done everything doable in the cryptocurrency space. So, okay, let's get started right away. Let's get started right away. So, what exactly is technical analysis? What exactly is technical analysis? What do we know as technical analysis? What exactly is technical analysis? Now, technical analysis is a trading discipline used to evaluate investments and identify trading opportunities in a price trends and patterns seen on charts. Now, this simply means, putting it to layman terms, technical analysis means everything that has to do with the price chart. I hope everyone can see my screen. Everything that has to do with the price chart, everything. Maybe you're opening your BTC US dollar charts, you're opening your Ethereum US dollar charts, everything you see on there, every tools you are using, every analysis you are using, all those green, the reds, everything. In fact, using technical analysis to analyze will give you the information you need to take on your next trade. Now, that being said, technical analysis is what we use to determine our trades, right? To determine whether we are going to click buy button or we are going to click sell button. Now, what are technical analysis tools? That is the next thing we are going to be looking at. What are technical analysis tools? Okay. Now, I've explained what exactly is technical analysis. For the sake of the newbies, that's why I'm touching these definitions bit by bit. I'm not even going to waste any time on them. I'm not going to waste any time on them. Now, the next thing to look at is what are technical analysis tools? TA tools, when I mention technical analysis, I mean TA. When I say TA, I mean technical analysis. If you are already in the crypto space, if you're already playing in the crypto space, these abbreviations won't be new to you. Now, technical analysis tools are devices used to measure the value of a coin. It is used to predict the next direction of an asset or coin. Technical analysis tools includes those drawings of support and resistance, the drawing of the patterns in all of those patterns, those triangles, the indicators, and so on, and everything. Those are what are called technical analysis tools. Now, to the next one. What are technical analysis indicators? What are technical analysis indicators? Okay, great. More people are joining us. I love this. What are technical analysis indicators? These indicators include RSI, MA, MACD, OBV, the volume. Most indicators are mathematically calculated, and we don't even want to go into maths in this Zoom session. Even me myself, I don't like maths. So don't worry, I won't bore you with the mathematical terms. So indicators are basically your traffic lights. You know, we are in the traffic lights, we have green, red, and the amber. The green means go, red means stop, and the amber means ready, right? Now, practically, your green in your technical analysis indicator is going to tell you that you should buy or you should long. And then your red is going to tell you that it's short or sell. Practically, that's practically. So I'm using that term so that we can understand more. And then there are some times that we require to do nothing. There are some times that we are required to do nothing in the market. That is your amber lights blinking, telling you to do nothing. So that is basically what technical analysis indicators are. Now, the difference between the two and why they matter. What are the difference between technical analysis indicator and technical analysis tool? The difference between the two and why they matter. The difference between technical analysis tools and technical analysis indicator. If you notice, I mentioned indicators as part of technical analysis tools earlier. When I was defining indicators, I mentioned indicators also. Now, indicators are also classified under tools. You can use in measuring the intrinsic value of an asset and also signals. It signals you when to buy and when to sell a coin, right? That is basically what they are. That is the difference between the two. Now, an indicator can be a tool. An indicator can be a tool. And like I said, indicators are like those things that signals to you. In indicators, mostly you do the plotting. But in the tools, you might apply them, you know, the Fibonacci, the support and resistance, you draw them and all of that. Now, so when I'm talking about technical analysis tools in this presentation, just know that I'm referring to the two. I'm referring to technical analysis tools and then I'm referring to the indicators. Now, okay, to the next part, the most important tools you need to know and how to use them to spot opportunities. The most important tools you need to know and how to use them to spot opportunities. This is the real deal, guys. This is the real deal. This is the real deal. Now, okay, normally, there are hundreds or even thousands of technical analysis tools available to you as a trader. But the funny fact is that to place a successful trade, you don't need all the TA tools in the world. You only need about 2 or 3. Ask around, ask successful traders. You don't see their charts messed up. You know, all those drawings and everything, drawing this, drawing that. But those drawings can even get you super confused. You are the one using all of the indicators. Then you are complaining that still you are not making great trades. That's because you are complicating everything for yourself. Now, this is why I've compiled 5 of the most used and most important technical analysis tools every successful trader uses. Now, another thing is that these tools are the simplest to use tools. Trading has nothing to do with complexity. Like I said earlier, and that's the main reason why you need to keep it simple. You need to keep trading simple, 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 simple. When you start complicating things, your chart starts getting messy and then you start getting things wrong. Because the fact is that when you have many TA tools on, if 2 of those TA tools are telling you, man, this is a bad idea. This is a bad idea. That's because you have over knowledge. The knowledge is too much. You've already studied technical analysis and you feel, man, in fact, it's not always advisable to overknow this technical analysis of a thing. It's not always advisable, but you still need to know the basics. And that is the essence of this class. The basics that is going to make you to choose good trades, to choose profitable trades. So that is it, guys. That is it. Now, okay, moving on to the first one. Moving on to the first one. Trend lines. Trend lines. Trend line is the first tier tools you're going to be using. And it's like, I've arranged these in some order that they are the orders that are the most important to the least important, but everything is still important because there are tools that you need to know as a trader. There are tools that you need to know, and then very, very important. Now, trend lines. What are trend lines? Trend lines are easily recognizable lines that are drawn on charts to connect a series of prices together or show some data's best fit. Now, trend lines are used to determine the current trend of the market. It's when you draw your trends properly that you can determine whether a market or a coin is in an uptrend, a downtrend, or a sideways movement. I hope you guys get the meaning of trend lines now. Okay, moving on to the next one. How to draw a proper trend line. Now I'm going to I'm going to show you guys how to draw how a proper trend line is being drawn. How a proper trend line is being drawn. I hope you all can see my trading view app. I hope you all can see my trading view app. I just switched to trading view right now. Okay. Okay. Great. So a trend line is drawn. This one right here is trend. So if I want to draw a trend line here, this is how I do it. This is how I do it. And then it continues going on and on like that. Now, what makes a trend line valid? If it is a bearish trend line, like this one right here, if it is a like this guy, okay. Oh, I just missed my trend line again. Okay, great. All right. I hope you all can see my trend line. I hope you all can see my trend line on TradingView. This is a bearish trend line. This is a bearish trend. Look at it. Drawing it from the top to the bottom. That is how bearish trend line have been drawn. This is a downtrend. This is how it is being drawn. This black line you are seeing right here, this is a trend line, and then this is a bearish trend line. Now, in a downtrend, it forms lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. That is how downtrend lines are being formed. That is how they are being formed. That's how they are being formed. So this one is very, very obvious. Now, what if you want to draw an uptrend? What if you want to draw an uptrend trend line? Let me just remove this my movie M8 tools so as not to confuse you guys. Okay, so here is me with my trend line tool. If you are new to TradingView, you can just come here. This is where you see everything. This is where you see your trend line. I just customized this one for my own sake so that I can get it easily. So this is obviously an uptrend. This is obviously an uptrend trend line. Now, you must make sure that the price that is touching those lines, make sure that it's touching those lines. So basically, that is what trend line means, and then that is how you draw your trend line. That is how you draw your trend line. Okay, moving on to the next one. How to spot buy or sell opportunities with trend lines. How to spot buy or sell opportunities with trend line. Okay, let me see if there are more people in so I can admit. Okay, great. Okay. Yeah, let's move on. Great. So, how to spot buy or sell opportunities with trend line. Now, in an uptrend drawn trend line, like this first one I drew right here, or let me try and change the color so that you guys can get me faster. Let me just change to purple. Great. Now, this is an uptrend trend line. In an uptrend trend line, the line is touching the higher lows, and you can always buy or long at that higher low and take profits at higher high. You rinse and repeat. Now, this one is obviously, why is this guy not touching my guy now? Aha. This one is obviously touching. It is obviously touching the trend line. This is what is called higher highs and higher lows, 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 higher highs and higher lows. Now, if you want to draw an uptrend trend line, that is how it is drawn. That's how it is drawn. Now, the way you can use this thing, this trend line, to spot opportunities is when you buy at higher low, this bottom here, and then you sell it on top. You sell it you sell it at higher highs. You buy at higher low, sell at higher high. Buy at higher low, sell at higher high. Buy at higher low. In fact, let's look at other charts. Let's look at other charts. Okay, let me see this Ethereum chart. Let me see this Ethereum chart. Great. I have a good uptrend here. I have a good uptrend here. Great. I hope you guys can see this. Now, let's say reverse to this guy. Let's say we are currently here, and then we saw that this uptrend is valid, and then we've drawn our trend line. We can buy here, sell here, buy here, sell here, buy here, sell here, buy here, sell here. And that is how you create trade signals for yourself till the end of the trade, till the end of the trend. Till the end of the trend. That is how it works. So I've showed you that quickly. That is how you can spot buy and sell opportunities. Now, okay, the same happens to a downtrend. The same thing happens to a downtrend. If you see a downtrend, that's the same thing we are going to do. See a downtrend right here. See a downtrend right here. You make no mistake when you short here and you take your profit here. You make no mistake when you short here, you take your profit here. The same thing with here and here, and here and here. But normally, you know, okay. Let's use this one as a typical example. Now, you know, downtrends form lower lows and lower highs. Now, this is a downtrend. This is a lower low. This is a lower high. This is a lower low. This is a lower high. So when you short here, you short at lower highs, you take a profit, you short, you take your profit, you short, you take your profit. That is how you create signals, and then you spot opportunities using trend lines. Very easy, right? It's just simple. When the price touches that line, you are going to take action there. You short or you sell, then you take profits. When the thing has gone to your interest, your point of interest, when you're satisfied, you short and then you take profits. Now, also you need to know that it's not only higher highs and higher lows. It's not only uptrends and downtrends we have. We also have consolidating markets. Say an example of the consolidating markets right here. It's not going up, it's not coming down. It's just going sideways. That is a good example of the consolidating market. And then you can also trade the consolidating market. And then we are still coming to that properly also. Okay, to the next point. Support and resistance. This is like one of my favorites. Support and resistance. I so much love support and resistance. So what is support and resistance? Support and resistance lies are one of the most widely used technical analysis tools in financial markets, be it stock, bonds, equity, forex, anything. Forex, anything, cryptocurrency, you see support and resistance. It's always the king. Support and resistance is always the king. And that is where drawing levels also comes in. Now, okay, I've mentioned that they are one of the most widely used TA tools in the financial markets. Now, support and resistance is very, very broad. And then at the same time, it is simple to understand. It's broad because it has many types. There are many types of support and resistance. You can see a diagonal support and resistance. You can see a sideways support and resistance. You can see a support and resistance in the macro view of a coin analysis. So you can spot support and resistance. In fact, you can see support and resistance in triangles. You can see it in triangles. You can see it in patterns, many places. So support and resistance is very, very broad. And at the same time, it is simple. It's a very, very simple concept. Now, okay, let me tell you why support and resistance is simple. It's because we are going to be relating it to real life instances, right? And that's how you understand it. Now, if you say your support and resistance is difficult, or if you are finding support and resistance difficult, and then maybe you are looking at the chart and you're saying, where is even the support? Where is even the resistance? The fact is that you see that support and resistance that you've drawn, that you are finding difficult, is not valid, because a valid support and resistance will be very, very clear. Very, very clear. And then I'll show you guys what I mean. Let me just clear the drawings for this guy. Remove drawings. Yes, I'll show you guys what I mean. Now, look at this side. Who wants to know that this is a resistance up here and this is a support down here? Who wants to know? Even a 5-year-old will know this. Very, very easy. Very, very easy. So, see, to draw your support and resistance, I'm already moving to how to draw your support and resistance. You just need to come, just zoom in so you can see very well. Then you pick a point. Oh, I'm not supposed to do that. I intend to use trend lines to draw, or let me just use rectangles. I prefer to a point. Make sure that the line you are drawing is horizontal. Support and resistance lines are horizontal lines. I forgot to add that. I hope you guys can still hear me. I hope you can hear me and see my screen. I hope you can see as I'm drawing the support and resistance line. I hope you can hear me. If you can hear me, send I to the chat session, please. Quick, so we don't waste time. I intend to spend 30 minutes in this Zoom session today. And at the same time, make sure that you guys are understanding everything I'm talking about. Great. I love this. High tension. Thank you. Abraham, I see you. Zoe, Ice Guy, Damola, Lucky. Great. Thank you for that. Nice. So this is a resistance line, clearly, obviously. And then this is a support line. This is a clear support line. This is a clear support and resistance line. Now, if you are still a newbie, and you don't understand the ideology behind support and resistance, or you don't really understand how to draw support and resistance, just take it this way. Take your support. This is your support. This is the support. Take your support as a floor that either breaks down or bounces. And then take your resistance as a ceiling that either bounces or break upward. Now, this is what I mean. Look at these supports right here. Now, when the price got here, it bounced. The price bounced here, bounced, continued sideways. And then when it got here, did it still bounce? No, it broke down. That is what defines the support and resistance. It is a floor. This one is a ceiling. The floor either bounces, the price either bounces at the floor or it breaks down the floor. And then the price either bounces at the ceiling or it breaks upward the ceiling. You can see example of breaking upward the ceiling right here. Breaking upward the ceiling is very, very clear. A quick one. Very, very clear. See this small support and resistance right here. The small one right here. If you use a smaller time frame, you can see it clearly. So I hope I've as well shown you guys how to draw a valid support and resistance, and then we refer to it as S and R. Now to the next one, how to spot, buy or sell opportunities with support and resistance. Now, in the case of support and resistance, you can either trade. Okay, let me look for a better support and resistance. Let me look for a better one. Oh, I need to change this to 1 day. Great. Okay, let me just use this guy right here as an example. Let me use this guy right here, drawing my support and resistance. This is just a short one. Okay, that's my resistance, and here is my support. Great. So as I was saying, how to spot opportunities with support and resistance. Now, okay, in the case of support and resistance, the opportunities can either be by bouncing back, support and resistance, the price either bounces at support or resistance or it breaks it, right? Now, once the price nears support, you can buy or you long. Let's take a look at this guy. Let me see. Let me make use of my replay tool. Great. Great. Now, okay. Great, 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 great. You see, this guy, before it comes to this side, the price was near the support. Now, if you are looking to buy or you are looking to long, you can as well buy here. You can, since you've drawn your support and resistance, you can so you can as well see when you see that the price chart is near the support, you are going to play, you can place your buy or you place your long. And once you place your long, you take your profit at your resistance level. That is if it bounces. As well, you should set your stop loss. Very, very easy. Now look at it. I've already taken my profit as resistance. Very easy. Very easy trade. That is how you use support and resistance to trade. In fact, it's a trading strategy on its own. In fact, using that trend line that I explained earlier is a trading strategy on its own. So that is how you can make profit to support and resistance. Same thing with when you see that the price is already nearing up, it's already nearing the resistance, and you're expecting it to bounce. When it's near the resistance, you can as well set your sell short. And once you set your sell short, once it gets to your support back, you take your profits. As easy as that. As easy as that, guys. As easy as that. Okay. Okay. Great. Great. Okay, now back to our chart. Back to our chart. What if we want to trade a break of either the support or the resistance? Now we are looking at the breakdown right here. We are looking at the breakdown. We're looking at the breakdown where you can use this to spot opportunities or to create opportunities for yourself. When you see a breakdown, you definitely know that you can short this market. And when you short this market, in fact, you can be in profit. Now, let's assume I short this market. Where is that tool? Where is that my favorite tool? No, not tool. Short position. Let's say I short this market after I saw that this guy has that this guy has broken resistance. It has broken resistance. I mean, it has broken support, and then I set my short right here. Let's say I just put my stop loss above this guy, and then I increase my long position. I mean, I increase my short position. Definitely, when I get here, I'm going to take profits, right? Now, what this chart is even insinuating, what this chart is currently saying is bearish, because what confirms a support and resistance breakdown, this one, in this case, a support breakdown, what confirms it is a retest of the support. Now, this support is retested here. Look at it. This support is sweetly retested here. So what else? What else is next? Going down. Going down, going down. But you know this is crypto. Anything can happen. You still need to set your stop loss. You still need to set your stop loss. Well, that's the quick analysis of the current Ethereum charts. That's the current analysis of the current Ethereum charts. It might come to pass. Prediction might be correct. It might not be correct. This is crypto. Anything can happen. So I'm just using that to take you guys on the support resistance. Now, that being said, I hope you all can use support and resistance to spot trading opportunities now. Okay, now moving on to the next guy. Where's my Zoom slide? Moving on to the next guy. Volume. Volume. I like the sound of volume because the sound itself speaks volume. The sound of volume speaks volume. Now, volume. What is volume? What is volume? What is volume? Okay, volume is also in fact, a super important tool which should not be taken for granted. In fact, you see, to stress the importance of volume, if you open your trading view, if you are just downloading trading view or you're opening your trading view chart, trading view has this volume too. This is what they call volume. It has volume by default. On your Binance or your KuCoin, most of those exchanges, they have volumes by default. That is to stress, to tell you how important volumes are to your trading, to your Forex trading, to your crypto trading, to your stocks trading, to everything. Volume is very, very important. And then you can also use volume to spot trading opportunities. You can use it to spot trading opportunities. Now, how to use your volumes properly. These volumes you see right here. Let me remove the price itself so you see the volume clearly. Look at the volume. Look at the volume guy right here. This is the volume guy right here. This is the volume guy. Great. So this is the volume. This is what the volume means. This is what the volume means. Now, how do you use your volume properly? How do you use your volume properly? How to use it properly? Now, okay, let me just on my candlestick. Okay, for the sake of newbies, you see this red green guy here. It's called a candlestick. It's called a candlestick. You should check videos on anatomy of candlesticks to learn more about candlestick. You check videos on anatomy of candlesticks. Okay, so firstly, you can use volume to select the assets to trade, to select coins to trade, to select the crypto you want to trade. Excuse me. Now, when you see an asset with an high volume, you can be rest assured that there is enough liquidity to fill your orders. You know, there are some kind of orders that are going to say that those orders are going to fill 3-4 times. Maybe your orders is very, very large, and then the orders has to fill 3-4 times before your trade gets successful. That's because that market is not liquid. There is not enough volume in that market, and it's very, very dangerous. You are trying to buy. If there's no other person that wants to sell to you, or you're trying to sell, there's another person that is trying to buy to you. That's when there's not enough volume in the market. So you can as well use volume to select coins to trade. When I trade a coin with volume, I can be rest assured that my buy and sell will be very, very fast. My orders will feel fast, and then I can be sure that whatever coins, even if I'm investing, that coin is certainly going to grow in value in the future. Why? Because traders are trading that coin. It's a simple ideology, very, very simple ideology. A dry market, people will not go to a dry market. A dry market might not even move. Even if you say altcoin season more than that, the coin is still not going to move because it's dry, there's no liquidity. That being said, you can take advantage of a rising volume or a falling volume in a number of ways. Now, let me show you what a rising volume means. This guy right here, this guy you see right here, from this guy to this guy, that's a rising volume. That's a rising volume. Now, let's see another guy. Let's see another guy. You see this guy to this guy right here. That is a falling volume. You can see that volume is falling. You can see it. That is a falling volume. This is a rising volume. Now, I said you can take advantage of a rising volume. It means when you take advantage of a rising volume, this means that liquidity is flowing in when you say rising volume, and it's about to get bullish. So it's time to buy long. When you see that the volume is increasing, it's about to get bullish, it's about to buy long. That means liquidity is coming in, money is coming in now. Now, a falling volume means that people are losing interest in the market. Money is leaving and is about to get bearish. So get out of the market, just short sell. People are leaving. Look at this, people are leaving. But I don't want to use the present condition so that it doesn't cause confusion to a lot of you guys. So you won't say it's Rob that say you should sell, or you won't say it's Rob that say you should long, because I don't want that. Everything we say here is you need to ponder upon it, think about it before you now use the information to your own advantage. And I know that we are telling you correct information. Profitably media can't give you wrong information right here. So you can also take advantage of the rising and falling volume in this way. Now, a decreasing price, where's my chart? Great. A decreasing price with an increasing volume is a more bullish signal, which is called a bullish divergence. I'm looking at the time just to make sure that I'm not taking much of you guys' time. Okay. Now, look at what we are saying here. A decreasing price with an increasing volume is a more bullish signal, which is called a bullish divergence. Now, let's imagine that this guy right here, this price is decreasing. Let me use smaller time frames so I can see them very well. Okay. I'm not seeing divergences here. Divergences are very hard to find. Very hard to find. Okay. Oh no, see the same thing. But this is the old of it, guys. This is the old of it. I'm just explaining so that you guys will understand. So that you guys will understand. When you see a falling price and then you see a rising volume, it's here, right here. This price is falling. You can see it right here. See this chart. Now the volume is acting opposite to it. That's what a divergence is called. That is what a divergence. That's what a volume divergence is called. And then you know it is about to get bullish. About to get bullish. Now the same applies if we twist it the other way around. When you see a rising price and then you see a reducing volume, you know that it is about to get bearish. That is what we call a bearish volume divergence. That is another way I can use volume to spot trading opportunities. And volume can also help you confirm a trend. Can also help you confirm a trend or a reversal. Now, I hope you all can now see and understand how to use volume properly in spotting opportunities, in spotting trading opportunities. And then I hope I'm making sense to you. Don't worry. In fact, you can as well go over this video. You can screenshot. I'm always saying screenshot the slides, screenshot the chart, screenshot everything you see here. Everything is free for you to check again because too late. It's never too late. So basically, I've explained the use of volume. Now let's move on to the next technical analysis tool, which is moving average. Moving average. Now, you know, yeah, if you've been trading and then you've been in the crypto space, you know that there are different types of moving average. We have simple moving average, the SMA, the EMA, but and all of that, there are more. But I'm not going to be telling you all those ones. I'm not going to be explaining the SMA, the EMA, now explaining this from that, this from that. In fact, you don't need all of those. You don't need everything. You only need like one. I use only one moving average. Just one moving average. I don't use SMA, those EMA, those the rest. I don't use them. Just make use of one or two or three. It's enough. So the MA tracks the main price. That's basically what an MA does. It tracks the main price and then it creates a smooth line with an average calculation of these prices. But you don't need to know all those average calculations. You don't even need to do it yourself. All you just need to do is to properly plot your MA, your moving average. Now, you can have various moving average, like the various distance of moving average. You can have the 20-day, these are the most popular. You can have the 20-day moving average, you can have the 50-day moving average, you can have the 100-day moving average, and you can also have the 200-day moving average. You can have all those ones, those four, 20, 50, 100, and 200. And I'm going to explain the function of each, but I'm firstly going to show you how to plot a moving average. I'm going to show you all you need to know in order to plot a moving average. Now, okay. Let me clear my drawings so you guys can get it. Okay, so basically trying to move this guy back. Okay, now I'm currently in the 1 hour time frame. I'm currently in the 1 hour time frame. And then to draw a moving average, just come to indicators right here. Just come to the indicators and then just search for moving average. Search for your moving. Okay, it's right here. It's right here also. So let's just use this one. Let's just use this one. So this is a moving average. To set the values of a moving average. I mentioned earlier that you can have 20-day, 50-day. Those are the most popular. 20-day, 50-day, 100-day, and then 200-day moving average. So just click on your settings, and then the length, you adjust the length. Let's make use of the 100-day moving average first. Yes, the 100-day moving average. Now, you know, we've talked about trend lines earlier. Now, okay, this is the 100-day moving average. Now, one fact about the 100-day moving average is that it can be used to recognize a trend. Now, this 100-day moving average, for you to use it to recognize a trend and trade it like you are trading the trend is, oh, sorry about that. Okay. For you to be able to use it to recognize a trend and trade it like you are trading a trend, it works best with your 4-hour time frame. Okay, great. You can as well see here a smooth line of the 100-day moving average. This is a very smooth line of the 100-day moving average. Now, this is a downtrend, of course. This one to spot opportunities with this guy right here. It's just a matter of shorting when the price touches the line. You take your profits later. Short when the price touches the line. Take your profits later. Short when the price touches the line. Take it later. Short when the price touches the line. Continue like that. Same thing happens to the bullish aspect of it. The bullish aspect of it. Show me bullish. Great. In fact, I love this one. This one is like super perfect. Look at every time the price touches this guy, it is increasing, and then you can take the profits. You can as well set buy or long here Said buy or long here, take your profit. Said buy or long here, take your profit. Buy or long, take your profit. Buy or long, take your profit. As easy as that. Rinse and repeat. Rinse and repeat. Repeat it, repeat it, repeat it. The only time when it gets harder is when the market is consolidating. And I hope you already know that one. And when the market is consolidating, we see that this guy tends to move with the price, or it moves in between the price. So that is how, okay, I'm still talking about those moving averages. So I mentioned the 100-day moving average. Let me just quickly touch the 20 and 50. Now, I make use of the 20-day and 50-day moving average the most. And this is you using moving average as a signal, as a crossing signal. You can also use moving average to spot opportunities when they cross each other. Now, the trend line becomes more bullish. Let me just control this guy first. I need you to 20-day, and then I will add another one, another moving average again. But this one is going to have a different color. Let's set this color. You can as well set the color right here. Let's set the color to red. Yes, let's set the color to red, and then 50-day moving average. Great. It works best on the 1-day time frame. Great. Okay, looks like my chart is messed up. Okay, great. Now, here is it. If you notice, this is the blue one is the 20-day moving average, the red one is the 20-day moving average. Every time these lines crosses, the trend changes, right? Every time it crosses, the trend changes. But you know, they are not always accurate. They can be a fake out. That is why it's advisable to use these signals or these indicators together with other ones. Now, this guy, this blue is the 20-day, this red is the 50-day. Anytime the 20-day, the shorter one, crosses over the longer day, this is 20 crossing 50, it is bullish. Now, if 50 is crossing 20, it is bearish. Can as well see it. Immediately, the 50, which is the red color, immediately it crosses here, it crosses the blue line, which is the 20-day moving average. We had a downtrend. So you can as well use this one to spot your opportunities. If you take your short here, you'll be fine. The trade will continue, and you'll be in a lot of profits even before it crosses again. It's as easy as that, guys. It's as easy as that. So that's how you spot opportunities with moving averages. Okay, I think I've done enough justice to moving average. So all right. Let's move to the next one, which is like the 5th one for tonight, and like the last technical analysis tools I'm going to be talking about: unbalanced volume. Did you guys notice I didn't mention RSI? Did you guys notice I didn't mention relative strength index? I didn't mention relative strength index because I have a substitute for unbalanced volume. Truly, all of those indicators, they do their own work, but you know, depends on your trading style. We prefer things than each other. This is what I prefer. I prefer unbalanced volume. I prefer unbalanced volume to relative strength index, to RSI, and then I'm going to tell you why. But firstly, let me explain what unbalanced volume is. Unbalanced volume is useful. Okay, let me just start from the beginning. Unbalanced volume is more of a conviction and confirmation signal. It can be used together with other tools like the support and resistance. Do you understand? So if a resistance breaks to the upside and the OBV is also trending upward, then it tells you that there is a volume and the breakout is real and not a fake out. The fact is that unbalanced volume, OBV, is faster. OBV is faster than RSI. It's faster than RSI. It's faster than RSI. Very, very fast than RSI. And to me, it is even more reliable than RSI. It's more reliable than RSI. Now, I'm not trying, if you are perfect with RSI and then you use RSI to trade profitably, leave your RSI, you continue using your RSI. In fact, stick to it, marry it, as long as RSI is making you money. But OBV to me is what I prefer. I prefer OBV a lot. Okay, let me see if I can admit some people in. Okay, great. Okay, so OBV is also useful in spotting divergences. You know, I've talked about divergences earlier. OBV will spot a divergence easily and faster than RSI, as I explained. So a bullish divergence is when the price is moving down and the volume is moving up. A bearish divergence is when the price is moving up and then the volume is moving down or reducing. Now, let me show you OBV in practical aspects. This guy right here, this blue line is OBV. Now, let me show you how to plot OBV. Am I following? Okay, great. Let me show you how to plot OBV properly. How to plot OBV properly. Now, this is an OBV. Let me cancel it out. Okay, I only have my volume and my this now and my price charts now. Now let me add OBV, unbalanced volume. Where is this guy? You can just search for it. ONBALANCE. I'm going to see it on your trading view, even if you are using the free plan. Even if you are using the free plan. So I just clicked on OBV and it's going to load for me right now. Yes, this is OBV right here. This is our guy. This is our guy. This is our OBV. Yes. So the OBV also monitors volume, but it combines the price, the open and close of the price, and then it combines this volume together. That is how OBV works. It makes use of this volume and this price. It combines the two together to give you a signal. That is how OBV works. Now, as I said earlier, you can use OBV to confirm a trend. You can use OBV to confirm a trend. Look at this trend right here. Look at this trend. This downtrend. Great. Okay, let's even say from year to year. This downtrend from year to year. This downtrend from year to year. Now look at our OBV2. Look at our OBV2 from this guy. The OBV happened from this guy to this guy. If you zoom in, you are going to see it properly. If you zoom in, you are going to see it properly. Great. That is OBV for you. That is OBV. The same thing happens here. The same thing happens here. Now, there are instances whereby the OBV, I mean, the price will be opposite the OBV. Immediately you see, okay, let's say, for instance, this price right now is going down, and then you see your OBV, you see it moving up, man, it's about to get bullish. It's about to reverse. The price is about to reverse. So you can as well set your buy. That's how you spot opportunities with OBV. That's a divergence. That's a divergence. When the price is coming down and then your OBV is going up, man, buy, just buy your long, It's about to get crazily bullish. But make sure that you're also setting your stop loss. It is very, very important that you set your stop loss in all of your trades. So, okay, the same thing happens to a bullish market also. When you see that the price is going, or even when you see a support and resistance breaking, and then you see the resistance breaking, but we are not seeing the enough volume on OBV. OBV is not moving upward. It can be a fake out. It can be a fake out. It can be a fake out. So you guys should just be very, very careful when you are making use of OBV and then all of the other signals I've talked to you guys about. So tonight I've talked about, for the sake of the newbies, I've talked, or those joining in, I've talked about technical analysis. How technical analysis is what you use to measure the value of the coin, and then is a signal to let you know whether you are going to buy or you are going to sell. And then I also mentioned the most important tools that you should know. Where I mentioned OBV, support and resistance, the trend line, moving average, okay, support and resistance, volume, yes, and then also volume. So those five, I've made mention of those five. And I hope that you guys got all of that. I hope that you guys understand all of that. Now, if you have your questions, you can start dropping questions in the chat. Start dropping your questions in the chat. Ask me questions. I'm ready to answer you. Ask questions. Ask questions. Ask your questions. Ask your questions. Now, okay, if you are just joining in, I would like to share you Crypto-Based Media's contacts and then our YouTube channel so that you can subscribe and get to know when the recorded version will be out. You get to know when the recorded version of this Zoom session will be out. Just continue asking your question I'm ready to answer all. I'm ready to answer all. Just now, okay, to add, if you are ready to up your skill, if you are ready to learn how to trade properly, how to trade the market, all of this technical analysis and everything, you can get our course, our online crypto trading course. You can get it. You can get it. Just message Crypto Pastor. You can just send him a message through this number, the first number, out of Crypto Based Media on WhatsApp. Just message him on WhatsApp, and then you can get the course. You can get the course. It's going to give you all of the details that you need to know. And also, if you are just joining in, just subscribe to our YouTube channel. Subscribe to our YouTube channel and turn on notifications. There are many educative videos right on our YouTube channel. There are many of our videos right there. There are many of our videos. So continuing, the smaller the time frame, the more uncertain it is. A smaller time frame can be showing you that it is bullish. Meanwhile, the macro is bearish. You should know that. You should know that. You should know that, Lucky. You should know that. Okay. Echo Kifo. I don't know. Sorry if I didn't get your name right. Someone said, I don't really understand this OBV. I understand the others, but this last one, not really. Okay. Let me just cap it again for you. OBV measures your volume. It combines the price charts and then it combines the price chart and then it combines the volume together to measure it for you. Now, just assume OBV as your RSI. If you are used to RSI before, assume it as RSI, but just assume OBV as the faster version of RSI, right? Assume it as the faster version of RSI. OBV can even show you that a trend is in a downtrend. You can draw a downtrend from an OBV. You can draw a downtrend from an OBV. See now, it's right here. See, from this guy to this guy, from this guy to this guy, very easy to draw a downtrend here. From this guy to this guy. In fact, you can even spot double bottoms on OBV. This one is very, very crazy. You can spot double bottoms on OBV, honestly. But the fact is that don't expect that they will always be correct. You should use those things with the combination of other tools. You should combine it with other tools. So don't expect that no tool is 100% accurate. No trading idea is 100% accurate. That is how you trade. That is why you should treat your trades as a probability so that you can win all the time. Okay. That is that about the OBV. Don't worry. The more you use the tool, you are going to know it very well. Okay. Someone said, does the OBV have a specific time frame to work better? The fact is that it depends on the time frame. The OBV will be adjusted to the time frame that you select. If I choose another time frame now, this OBV is going to change. Just watch. The OBV is according to the volume of the current time frame and then the price position of the current time frame. That is what the OBV is going to show you. But just make sure, watch out. The macro, the weekly, and then the daily is the strong thing that shows you where the trend is and where the trend is going. You see those 15 minutes, 5 minutes time frame. It can help you to spot entries if you're a spot trader. But if you're a futures trader, it can also help you to spot short entries and long entries. So that is that about the OBV again. Okay, Charles asked that what is the best time frame can one use for support and resistance? You see, like I explained there, a lot of people still need to understand. I think I'll make a video about this time frame and this top to down analysis. You see, your time frame, you should treat your time frame as the higher the time frame, the more reliable the information is going to show you. That is the word. The higher the time frame, the more reliable the information. If I'm trading on a weekly time frame, if I'm seeing a weekly time frame and a weekly time frame is showing me bullish, and then a smaller time frame, like 15 minutes time frame, is showing bearish, and I say, oh, let's short the market, short the hell out of the market. And then I short the market, I say, okay, I'll leave this trade to run for days. I'm deceiving myself. Why? Because I'm not following it. But if I don't want to short the market for a short time, because I'm a futures trader, I'm going to use leverage, and I'm on a 15 minutes time frame, it's too okay for me. In fact, I can use a 5 minutes time frame to short, and then the market is still bullish. I'm just taking those risks as a futures trader. So everything is just daily. When you're doing this daily. So that is that about that. And then for you to know the best time frame for you to use, let's put it this way. It depends on whatever strategy you are using. If you're an investor, make use of monthly. First draw monthly, draw weekly, and then invest in your suitable price points, in your suitable levels. But if you are a swing trader, make use of daily time frame. If you are a day trader, make use of 15 minutes, 5 minutes, smaller time frame, and everything like that. It's as easy as that. Okay. Takim Valentine said, using volume indicator, how can we spot a coin to buy or sell the next day? Volume indicator to spot the coin like that. I've explained how you can use volume indicator now. You can use volume indicator compiled, I'll be combined with other tools. You can use it combined with your moving average. But you can't single-handedly use just volume to now spot coin that I want to buy. No, now. No. But volume plays a vital role. It plays a vital role. Now, money boy, please, when will you open a short free group which you will teach some tips to trade successfully? We have our Telegram group now. Ask Crypto Pastor, message that number. It's going to show you our Telegram group. The analysis that have been pasted there, knowledges that have been shared there also. And also our YouTube, there are videos, tons of videos on our YouTube channel where you can learn. In fact, over 50 videos on our YouTube channel where you can use to learn. Okay. Someone said, and lastly, Takin said, and lastly, please, did you say we combine 50-day MA and 20-day MA for signals? That is my own style. And then that style is what most people use. You see, one secret about this market that you guys need to understand is that when you follow what most technical analysts are using, when you are seeing what most of them are seeing on the chart, you get to be more successful. If most people are using support and resistance, I can't go ahead and be using one Mumu tool that is very, very complex. No, I have to use support and resistance also because I know that we are going to be seeing the markets the same way. So if a trader that sees that has like billions of position, if he sees that this thing is in support, he's using support and resistance, and I'm also using support and resistance, me and that trader can continue in the same markets now. When I buy and that trader buys, when the trader buys and then the market pumps, I'll take my profits. I'll be okay. So that is it. Use tools that most people use. Don't find one holy grail tool, one magic tool. If someone keeps introducing new tools to you, man, just be careful. Be careful with the tools you use. Make sure that you are using tools that most people are using. If the people are not really using that tool, just leave it. Even like I said earlier, if RSI is what you know how to use the most, use RSI. Leave the OBV. But as for me, I prefer OBV because OBV is faster. As for me, OBV is faster. Okay. Okay. Great. I think I'm done with all the questions. So, I think that brings us to the conclusion. Now, technical analysis doesn't stop here. You guys need to know. Technical analysis doesn't stop here. It goes on and on. In fact, if I continue talking, we can be here till tomorrow morning. And we don't want that, right? We don't want to be here till tomorrow morning. Now, it is good to learn technical analysis, but make sure you are not complicating things for yourself and make sure you are keeping it very simple. It is not by learning technical analysis. Trading profitably is not by learning technical analysis at all. In fact, you see, the best technical analysts you see there, the best technical analysts, all of them on crypto Twitter, those Oyimbos that you see, the best of them is they are not the most profitable trader. That's one secret. I hope you know what that means. It means that profitable trading goes a long way more than technical analysis alone. It has a lot to do with self-control, discipline, your mind, your psychology, your confidence to take trades, eliminating fears, treating trades as probability. And that is why you see technical analysts fail, because all they put in their head is technical analysis. You see, when somebody fails, they head on and say, I must learn technical analysis. I must learn T. Then they learn, and then their knowledge starts contradicting each other. When they see an opportunity, another technical tool or technical indicator is going to be negating that opportunity that they see because they already know many indicators in their head. So that's why I said you should know only important indicators and just be careful when you trade and always manage your risk. Very important. Very, very important. So that is it, guys. Now, in fact, you might even have the best setup, and then you see opportunities, but you still don't have the balls to take the trade. That is you depending on technical analysis alone. That is you not having courage. So, guys, make sure that you eliminate fear, take that trade, use that stop loss, use your risk management, manage your risk. Very, very important, especially in a markets like this, on certain bearish markets. Make sure you are using your stop loss and then you are managing your risk. Okay, this brings us to the end of tonight's Zoom session. I thank you all very, very much for listening and watching. I wish you all great weekends and great portfolio.